Good afternoon, ladies and gentlemen. My name is Gordon Shirley, and as Chairman of GraceKennedy Limited, it is my pleasure to welcome you to the 2021 GraceKennedy Annual General Meeting. This meeting is historical as it is GraceKennedy's first virtual annual general meeting. In light of the COVID-19 pandemic, and in order to comply with the government of Jamaica's restrictions on public gatherings, GraceKennedy applied to the Supreme Court of Jamaica and obtained an order from the court to hold our annual general meeting by virtual, electronic, or hybrid means. In observance of the court order and to facilitate your participation in today's virtual AGM, we are using an online platform to host the meeting. Notices were posted on our website as well as on the Jamaica Stock Exchange and Trinidad and Tobago Stock Exchange websites. Advisories were also published in the newspapers in Jamaica and Trinidad regarding the format of this year's annual general meeting. I'm very pleased to welcome the 188 persons who are participating online today. We hope that you and your families are keeping safe during this extraordinary period in our history. Thank you for joining us this afternoon. I take this opportunity to thank all our shareholders and customers around the world for continuing to choose GraceKennedy. We also thank the amazing GraceKennedy team. We would not have achieved all that we have without you. COVID-19 has presented what at times may have seemed like insurmountable challenges, but we have persevered. As vaccination programs are rolled out here in Jamaica and overseas, we are hopeful that this pandemic will soon be behind us. We look forward to emerging from this period stronger and more resilient together. As this is GraceKennedy's first virtual AGM, I will now ask our secretary to take us through the guidelines for today's meeting. We will then start this afternoon's proceedings with prayers, and I invite those persons who are so inclined to join us as Mrs. Gail Moss-Solomon, GraceKennedy's General Counsel and Chief Corporate Secretary, leads us in prayer.
Thank you, Chairman. Good afternoon, ladies and gentlemen. For today's proceedings, we ask that you adhere to the following protocols. We do thank you for the questions already submitted, and you still have an opportunity to submit questions via email to agm@gkco.com. We have allotted half an hour for the Q&A segment of the meeting. We do encourage you to identify yourself by including your name when submitting questions to the email address provided. Every effort will be made to address all questions this afternoon, time permitting. Responses to the questions not answered, however, will be posted to the GraceKennedy website. During the meeting, your microphones will be muted, but we do invite you to use the chat box located at the bottom of your screen to make comments. As mentioned before, however, please do not submit any questions in the chat box. Please email your questions to agm@gkco.com because only questions sent to the email address on your screens will be addressed during the meeting. When you were registering for the meeting today, you would have either registered as a shareholder, proxy, or non-shareholder. As is customary, only shareholders or their duly appointed proxies are permitted to move and second motions and to vote on resolutions. Non-shareholders will not be able to participate in the voting process, but you are of course encouraged to ask questions. To our shareholders or proxies, if you wish to move or second a motion, you are asked to use the raise hand feature by either clicking the reactions button, which is located in the center of the bottom of your screen, or utilizing the raise hand function in the participants list, which is usually located to the right of your screen. After each resolution is moved and seconded, shareholders and their duly appointed proxies are invited to vote by turning your attention to your screens where the resolution will be displayed, and you can click on the for or against button. Shareholders and proxies will have 30 seconds to cast their votes, after which the results for each resolution will be displayed on your screens. In the event you experience or are experiencing any technical challenges during today's meeting, you may reach out to our team for assistance by calling 876-932-3160. That's 876-932-3160. A recording of the AGM will be uploaded to our YouTube channel tomorrow, and that link will be accessible on our website. We do thank you in advance for complying with these protocols, and we look forward to a very successful meeting. Now, as the chairman advised earlier, we will commence this afternoon's proceedings with a prayer. And so I ask those of you in the room and online who are so inclined to bow your heads as we pray. Eternal God, the source of all life and goodness, today we seek your blessing, your guidance, your centering. We affirm our faith in you amidst the uncertainties of the present time. Pandemics, persistent poverty, and self-centeredness are enemies of the peace and prosperity for which our world yearns. As we gather together in this forum across the miles which both divide and connect us, individually and in our corporate operations, we seek your power to rise above the ordinary. Dear Lord, inspire us and strengthen our ability and our resolve to serve our people, to serve your people, so that they may truly experience justice, brotherhood, sisterhood, and peace. Lord, the giver of all life, we ask you to give comfort to those who have suffered and are suffering. We pray today for vision and for strength for the leadership of GraceKennedy, and indeed for all our leaders in church, state, and corporate enterprises, both here in Jamaica and across the globe. Direct our hearts and our minds, dear Lord, in the way that we should go, so that your will shall be done, and we will conform to the principles that serve humanity best. We declare that our God is the source of all life and all goodness, and all this we ask in the name of the Father, the Son, and the Holy Spirit. Amen. I will now hand back to our chairman, Gordon Shirley.
Thank you very much, Gail. I would now like to introduce Mrs. Moss Solomon in her capacity as Corporate Secretary, having earlier introduced her as GraceKennedy's General Counsel. Mrs. Moss Solomon will perform the function of Secretary of today's meeting. Will the Secretary please advise if a quorum is present?
Yes, Mr. Chairman. We have 131 shareholders and/or their duly nominated proxies attending online, and we also have 6 shareholders in the room. We have therefore met the requisite quorum of 3 as provided for in Article number 63 of the Articles of our company.
Thank you very much, Mrs. Moss Solomon. On May 6th, 2021, GraceKennedy received a court order which authorized the company to give notice of our AGM by publishing it in the newspapers in Jamaica and Trinidad, as well as posting notice on our website and the Jamaica Stock Exchange and the Trinidad and Tobago Stock Exchange websites. The AGM notice is also incorporated in our 2020 annual report, which is available on the GraceKennedy website. Pursuant to the court order, may I please have a motion that the notice of meeting be taken as read. Yeah.
We have Kadeen Da Silva, Chairman.
The motion has been moved by Ms. Kadeen Da Silva.
And Sheridel Blackwood.
And seconded by Sheridan Blackwood. Shareholders and duly nominated proxies, I now invite you to cast your vote by clicking on the for or against button on your screens. And you have 30 seconds to vote on this resolution. What's the percentage here?
It looks like 100%.
100.
I don't think they've ended the voting yet. Voting is still in progress.
The results are in, and as can be seen on your screens, we have 100% of those who have voted in favor. I declare the motion carried. We now move to the introduction of directors. I'm sure that all shareholders, as well as the management and staff of the company, will join me in expressing sincere appreciation to the members of the board of directors for their dedicated service to GraceKennedy and its shareholders throughout the year. We are very pleased to have our two executive directors present in person this afternoon, and I take pleasure in introducing you to Mr. Don Webby, Group Chief Executive Officer, and Mr. Andrew Masado, our Group Chief Financial Officer. We also have joining us online the following non-executive directors: Mrs. Mary Ann Chambers, Dr. Paris Loyi Jr., and Mr. Everton MacDonald, Chairman of our Audit Committee. Dr. Indiana Mintokoy, Mr. Peter Moses, Mrs. Gina Phillips Black, Chair of our Corporate Governance and Nomination Committee, and Mr. Peter Williams. The Group Chief Executive Officer, Mr. Don Webby, will now make a presentation on the performance of our company for the year ended December 31, 2020. You'll be given an overview of the 2020 performance and the first quarter for 2021, and he will also be sharing with you information on our strategic initiatives for the future. He will be joined by Mr. Andrew Masado, our Group CFO, in this presentation. Mr. Webby?
Thank you. Thank you very much, Mr. Chairman and Gail and Andrew. Good afternoon, everyone. First of all, let me thank all those online. I think we're close to 200 now who is joining us for the 2021 AGM. Thank you very much for your support. As you heard our chairman, this is the first virtual AGM for GraceKennedy and for a number of companies in Jamaica and in fact in the world. Having said that, I'm really looking forward to the day where we can welcome all our shareholders, those who wish to attend here physically at our head office on Harbour Street. I much prefer the face-to-face meetings. In fact, one shareholder who is not here with us this afternoon is what I'd call chairman, the famous Mr. Staple, who I had the opportunity a few hours ago to call Mr. Staple. And I said, Mr. Staple, how are you, sir? Are you joining? He said, unfortunately, Don, I cannot join. I said, you have any questions for me? He said, yes. Turn to page 125. Turn to page 188. I think it was a good thing Mr. Masada was able to answer some of those hard questions. But Mr. Staple, it was good to hear your voice again, sir. And hopefully next year we'll be all be together. Last year we had the opportunity of what we call it was some sort of a hybrid where we're streaming live our annual general meeting. And I made the comment that we have GraceKennedy shareholders living in 24 different countries. I asked Sidoni, our registrar, to check for me today, and that number is up to 25. So we have a new GraceKennedy shareholder residing in Germany, which is very interesting. As we said, Jamaicans are everywhere. But when I look on the list provided to me, it was China, Italy, Ireland, Australia, all over the world. So that reflects that Jamaicans are everywhere. And I want to, as we say in Jamaica, big up all the GraceKennedy shareholders wherever you are in the world. So good afternoon again, everyone. Let me start by saying my presentation will be basically in the 4 sections: the vision and mission, financial highlights. I want to speak to our shareholders, the owners of the company, a little bit about our strategy, and very important, our corporate social responsibility. Before doing that, let me introduce our team. Unfortunately, only 2 of our executive leadership team is here with us, previously introduced by Professor Shirley. My left, Andrew Masado, our outstanding CFO. Welcome, Andrew. And Gail Solomon, who is actually much more than our general counsel and chief corporate secretary. Gail is also in charge of communication and PR and risk management throughout the group. So welcome, Gail. And my team, must say, although you're not here, I want to publicly say to our shareholders that I'm so pleased of all of you with the hard work, determination that you are showing to get this great company even greater. Obviously, I'm not going to say it, but you'll note, I'm sure Gina Phillips-Black is counting that we have more women on our executive leadership team than men. So, I thought about my presentation this afternoon, and the last couple of presentations I've been doing, I have been starting off speaking about COVID-19 and that sort of a thing and how we are managing it. But for our shareholders this afternoon, I wanted to start a little different by sharing with you again the vision and mission of GraceKennedy. Our vision is to be a global consumer group delivering long-term consumer and shareholder value through brand building and innovative solutions in food and financial services provided by highly skilled and motivated people. And our mission is to deliver the taste and experience of Jamaican and other multicultural foods to the world and leading financial services to our region. I'm often asked by the shareholders, by you, our shareholders, and the investment public at large, Don, what exactly you mean when you say a global consumer group? And you'll have heard me say before, what gets measured gets done. So our definition of a global consumer group is 60% of our revenue earned outside Jamaica. You would say that we're at 46.6%. 50% of our group profits derive from outside of Jamaica. We're currently at 45%. And leveraging our relationship with our international partners. And that started off with our Western Union strategic partnership. They are now shareholders in GKMS. You will notice that there is a new company, Nestle. We entered into a joint venture with Nestle to do production at Dairy Industries. And World Brands, our company that distributes third-party brands, have actually entered into a partnership with Nestle to distribute some of their products for specific channels. The broad strategy behind leveraging our relationship with these companies here, Frito-Lay, P&G, Montero, etc., is that we want to expand the relationship outside of Jamaica in terms of the bigger picture. I must say, and I want to thank Nestle for giving GraceKennedy the opportunity to work with such a prestigious company, and our relationship is going extremely, extremely well. We're ahead of all the targets set. So I had to speak about COVID-19 as it has really preoccupied the world, preoccupied Jamaica, and of course, GraceKennedy. Let me say that, sadly, this year, some of us have lost loved ones to COVID-19. We have lost our own colleagues at GraceKennedy to COVID-19. May their souls rest in peace. My deepest sympathies go to those who have experienced the tragedy of this virus. In terms of GraceKennedy's response to COVID-19, we have been very proactive. In fact, I think the first case in Jamaica was early March 1st. And we had set up a multidiscipline steering committee chaired by Leanne Bruce Steele. They basically meet a few times a week. And that committee reports to the executive committee, which is the leadership team, which I just introduced with you, discussing all aspects of COVID-19. The first thing that certainly I said as the chairman of the executive committee is that the safety of the GraceKennedy staff is most important. Even if it means a reduction in our revenue or profits, our staff must be safe. So we actually implemented a work from home policy very early. And you'll see from this slide that 60% of our staff, as we speak, is currently working from home. Because of the nature of GraceKennedy, that percentage would have been much higher. But we have over close to 700 employees working in our manufacturing companies. And of course, you have to come to work and not work from home if you are in the manufacturing business, or that figure would have been much higher. Colleagues, the one that we are really focusing on in a very significant way is ensuring supply chain that it remains robust and consistent. And I must say that we are having some headwinds, to be frank with our shareholders and those of you on the call. Zach Mars is doing a fantastic job. But if you look at some of the issues that we're facing, not only Jamaica, but the world, and I'll give you an example. Freight rates from Asia is up 300%. 300%. When you look at the raw materials of some of the products that we have, cans or corned beef or Viennas, that they have gone up significantly, probably over 30%. So this is something that we really have to focus on and look at other ways of how we can become more efficient. So in terms of our pricing of our goods, that we can be very competitive and pass on a minimal amount to our consumers, because we recognize that we're going through a very difficult period. We also said that, listen, where there's a crisis, there's an opportunity. And you'll see throughout my presentation is that we have, in fact, identified a number of opportunities in the GraceKennedy group. And I'll be happy to share with you later in my presentation. And we care. You know, every time I speak about giving back to our communities, I sometimes get emotional speaking on behalf of GraceKennedy, because we do, in fact, care, and we are stronger together. Let me share with you our financial highlights for 2020. And as one newspaper carried it, simply outstanding, the highest in GraceKennedy's history. You would see from the pie chart, well, from the step chart on my left, that our revenues were $115.4 billion, up $12.3 billion, or 12%, or 12%. You know, I had set a target to the team that by 2022, we should be at $100 billion. Needless to say that we have surpassed that target from 2019, and we continue to show significant growth in 2020. So that $100 billion, we now have a new target. We can never get complacent in terms of performance. So where did the revenues come from a geographical point of view? We'd say that 53.4% is coming from Jamaica. Let me see if I can use this fancy. 53.4%, and the rest from outside of Jamaica. You would note from the chart that the company or the country or the region that is showing the significant growth is that of the USA, which now accounts for 27.3% of the revenue for the GraceKennedy group of companies. We did, in fact, have a fantastic year in terms of revenue. GF's Canada performed exceptionally well, double-digit growth. LLC, our USA business, performed exceptionally well, a growth rate of 21.9%. Our remittance business, outstanding, 18%. UK rebounded nicely. And our domestic business also performed exceptionally well. So in terms of revenue growth, we are showing strong growth. We showed strong growth for 2020. Growth of $12.3 billion, or 12%, with a strong growth rate of in the USA or the North American market showing a percentage of 27.3% compared to 25% for the previous year. What about our profits? Again, outstanding. Our profits grew by 58.4%, or $3.6 billion. And you'd see, looking at from 2018, 2019, 9.7 billion, which is significant. And what is more impressive, colleagues, shareholders, is that our 2020 results do not include any one-off adjustments. That's pure operating profits that you are seeing there in terms of 9.7 billion, an increase of 58.4%. Where did these profits come from? 55% inside Jamaica, outside of Jamaica, 45%. You know, my good friend, may his soul rest in peace, Cecil John, always said to me, but if you grow in Jamaica and don't grow outside of Jamaica, the ratio will get a little blurred. The point that I'd like to make here is that both Jamaica and outside of Jamaica is growing. And I'll share with you. Inside Jamaica is growing at 36%, which is really good. But our business outside of Jamaica is growing at 68%. So what that is saying is that our business outside of Jamaica is growing at a much faster rate than inside Jamaica. And that is why you see outside Jamaica in 2019 at 39% and now at 45%. Our LLC business, believe it or not, and I have my decimals in the right place, grew by over 1,000%, Andrew, in terms of profitability. UK actually growed, LACA growed, our remittances grew by 44%. And domestically, our Grace business grew by 25%. So, you know, let me pause again and recognize the GraceKennedy team for this outstanding performance. From the lady who serves the coffee when the pandemic is all around us, to our salesmen who is there with our customers to ensure that they get their goods, to our high-low cashiers, to our GKRS retailers. I want to sincerely thank all of you from the bottom of my heart in terms of your effort, your determination, your commitment to the GraceKennedy Group. And you are the reason why we can report to our shareholders this afternoon an increase of 58.4%. I'm just the messenger sharing the good news. You are the true unsung heroes of GraceKennedy. And I want to thank all the staff members of GraceKennedy, those in the front line and those in the back office, for your outstanding performance. I'm really, really proud of the team that we have here at GraceKennedy. In terms of profit after tax, that has translated to an increase of 34.5%. Colleagues, the good news is, and to our shareholders, the good news is that outstanding performance for 2020 has in fact continued into 2021. If you look at the chart there, our profits, our revenues are up 8.8% or 2.5 billion. And when you look at the 2019, 2020, and 2021, you'll continue to see a great improvement in the GraceKennedy's revenue performance. And again, the headlines would be that growth came across all business segments. Every business segment in the GraceKennedy Group for the first quarter produced increased revenues. And we reported to our shareholders revenues of 31.4 billion for the first quarter of 2021. In terms of profit, again, revenues up 8.8%, but profits are up 26.6%, of 1.8 billion, or an increase of $386 million. And I'll say it again for profits, that all business segments performed exceptionally well, all surpassing significantly their previous year number. And I feel very confident that this will continue. Although I've said to my board of directors, my chairman, Professor Shirley, and others, I never celebrate first quarter results. I celebrate when the winning post is closed. So we have a lot of work to do. There are some headwinds, as I mentioned, about the supply chain. But as executives, we are determined to continue to execute on our strategy as we move forward. And I believe very strongly, despite the headwinds, despite the challenges, we will perform well for 2021. And we have started the year good in terms of an increase in profits of 26.6%. I was really happy to see, and I'm sure as shareholders you would have been happy to see, that our year-end results, the market responded in terms of our share price. I still believe that our share price is undervalued. However, you would have seen that the GK stock has increased by 40% for the year, which is fantastic, against the market at 7%. So we are outperforming the Jamaica Stock Exchange main index significantly. In fact, some of you who follow the Grace stock closely, on March 1st, is actually traded as high as 95. So it has come back a little bit, but we hope with our first quarter results, we will see the market respond again. So I think that's good news, colleagues, for our shareholders, a 40% increase in the value of the GraceKennedy stock. And I'm sure Mr. Masada will have some good news as it relates to the dividend yield and dividend payout ratio when he does his presentation. All right, so let us look a little bit about the future. 2020 is over. We did well. 2021, we have started well. But when you're running a company like GraceKennedy, you have to ensure that you keep your vision in front of you. And here is how we track our strategy execution. So in the middle, I've shared our vision with you. We are a global consumer group. And what is that strategy that we have to ensure that we deliver in terms of our vision and our mission? We have 4 pillars. Our consumer centricity. We need to anticipate the needs of our consumer. We need to wow our consumer with new products and services. Internal processes. We need to invest in technology. We need to look at our systems and compliance, etc. Sustainable growth and innovation. Well, as you have seen, our revenue continues to grow, and I think we're executing pretty well in that regard. And a performance-driven organization. I'll show you a chart, which was the best news that I received when I came back from the holidays in January. So one of the things that we have to do at all times, we need to be very focused. We need to be very focused. And to keep that focus, my colleagues, shareholders, and friends, and those of you joining us, we have what we call a 10-point focus plan that at every executive meeting that we have, and by the way, we meet every Monday morning, we discuss how are we doing against focus areas, who is responsible, what gets measured gets done. So we have our digital transformation, that Stephen Whittingham is heading that, and our digital factory, it is stated on a slide, is actually up and running. And I think it's digital transformation is so important that I'll have a separate slide on that one. Mergers and acquisition, Andrew Leorini, his hands are very busy. He advised me this morning that we have 6 active merger and acquisition discussions happening as we speak. Invest in our brands, working capital management. Cash is king, colleagues, in a pandemic. Cash is king in a pandemic. It is extremely, extremely important that we manage our operational liquidity and cash preservation. And my colleague to my left, Andrew Mesada and Terry Ann, they report to me basically on a daily basis in terms of cash performance and how we're doing in terms of cash. Corporate social responsibility, which is my heart as it relates to GraceKennedy Group, and I'll share a few slides with you also. Operational efficiency. In this competitive world, if you are not operating efficiently in terms of cost containment and the use of technology, colleagues, you're going to be out of business. You're going to be out of business. Margin management in our food business is a key priority for us, and that is how we intend to unlock shareholders' value. Compliance and risk management, I must say this is an area that I'm extremely, extremely pleased with, and I must big up Grace Burnett and her team. I don't know if you recall a few years ago, I said that compliance is going to be a competitive advantage for the GraceKennedy Group. We're going to be world-class and best-in-class. Well, you know, if I had a marker, I'd put a green tick. We have accomplished so much in terms of compliance and risk management that while there's no place for complacency, we have come a significant way. And by the way, our remittance business is growing faster than the market in Jamaica. That means we are actually regaining market share. And I believe that our compliance systems and investment in technology and human resources is a primary reason why you are seeing that our market share in Jamaica and throughout the Caribbean is actually rebounding. And it is, in fact, a competitive advantage. Strong talent management. You know, I've said that the greatest asset for GraceKennedy is not on our balance sheet, but is actually our people. And I believe that very strongly. And as you can see with market share, we are gaining market share, I would say, in all our business segments, which is very, very pleasing. So I wanted to share maybe a little detail, our 10-point plan. But the message that I wanted to send to you, our shareholders, is that the executive team, we are being very focused in terms of what we're going to be delivering and how we're going to be delivering it as part of our broader strategy. And we provide strong oversight on each of these 10 items on a weekly basis. And that is how you get results. In terms of mergers and acquisition, just quickly, again, as you had heard from the investors briefing, we have acquired Scotia Insurance Eastern Caribbean Limited. There's a creditor life insurance. We are now in an advanced stage of speaking with the regulators in the 7 countries. I'll say that this acquisition is going to be accretive. I think it's going to be very, very positive for the GraceKennedy Group, and I'm extremely excited about this acquisition of Scotia Insurance Eastern Caribbean Limited. We acquired the 876 Blue Mountain Spring Water. It was actually distributed by, this brand was actually conceptualized by GraceKennedy and our partner who we bought the brand from many, many years ago. It was distributed by 876. It was distributed by World Brands, sorry. And when the opportunity came up for us to buy, we bought the brand. And again, this is going to be accretive. And I'm hoping that throughout the year, I'll be in a position to report on us closing out more acquisitions as we move forward. The great thing about these 2 acquisitions is that they are accretive. They are going to increase our earnings per share as we speak. I'd like to show this slide again because it paints the bigger picture. And, you know, when your team and Derek Record and Andrea Coy and the team in the USA market, when they are executing well, you know, I'm the greatest cheerleader. You recall when we bought the brand, I was appointed CEO of GraceKennedy July 1st, 2011. And one of the first major moves with the support of our chairman here, we bought a company in the USA because our vision was taking us. The arrangements that we had then was not going to take us there. And I remember standing up in front of all of you saying that, listen, we want to break out of the pack and we want to be the clear number 2 Caribbean ethnic brand in the United States of America. And of course, it took a lot of work, it took a lot of patience, it took a lot of investment, and it took a great team to deliver the results. When you look at the GraceKennedy, the Grace brand, your Grace brand, it has grown 78% since 2015. Our products are seen in Walmart, Publix, Winn-Dixie, ShopRite, and Independence, El Presidente, Sedanos. We are well supported there. And you know what is a big compliment, colleagues? When you get the WhatsApp or the emails or on social media, and you see proud Jamaicans holding up the Grace brand and say, yes, 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 I'm from Jamaica. That makes me feel good. When you look at the revenue growth, it's $36 million we have grown since acquisition. We'd have never have achieved that without us owning our own company. That company is growing double digits. And as I said to you earlier, the profits grew by over 1,000%. And I said it when we bought the brand that this company is going to be a game changer. And I'll share with you, my shareholders, this afternoon, that the best is yet to come in this company, the USA market. And those of you in the diaspora, thank you. Thank you very much. Thanks a lot for supporting the Grace brand. You are the foundation in which this great brand is growing in the USA. Thank you so much. If you look at our brands, one of the things that during the pandemic, colleagues, a lot of our competitors, both local and international, they were actually pulling back. And we made a decision as a board, and our board has been extremely supportive, chaired by Professor Shirley, extremely supportive of the executive team. And we said that, listen, while others are pulling back in terms of investment in the brand, we are going to invest. We believe in our brands, and we are going to invest in our brands. Right? So let me share with you. Our patties in the USA market grew by well over 100%. Nourishment, which we have been reporting has been on the decline. Well, Nourishment turned around. It grew by 14.71%, 2020 over 2019. And that has continued into 2021 because of our investment. It has grown just under 13%. So the good news is that we have said that we're putting in place the strategies to turn around the nourishment brand. And I give ourselves another check mark in green. Last year, nourishment grew by 14.7%. And this year, for the first quarter, it has grown by about 13%. I have a commercial that I want to share with you. Dale, are you going to cue it up for me? Let's go now. Let's cue it up.
Grown in the foothills of Jamaica, shared with the world, made with real love and passion, the gift of flavor that you love. We made real good jerk so you can make something great. Turn up the flavor with Grace Jerk Seasoning. Enjoy real Jamaican jerk.
You know why I love that ad. By the way, that ad has been on ABC and NBC with a huge investment. Again, when you get the calls from your colleagues and other Jamaicans and other Caribbean folks and even Americans, and say how proud of they are that GraceKennedy, this Jamaican company, ads are being shown on the prime network in the United States of America. It's a very proud feeling. But you know why? You know why I love that ad? You see that jam jerk sauce that you're seeing in the, what we call a jam bottle in Jamaica? Well, in that bottle is the pepper produced by our farmers in St. Elizabeth, Hounslow, which I speak about all the time. The scallion in that bottle is produced in St. Elizabeth, Hounslow. The processing is done in St. Elizabeth, Hounslow. The actual bottling is done at our Denby plant, where we employ 100 Jamaicans. In other words, only thing in there that is non-Jamaican is the glass bottle. Now, isn't that a great feeling? Isn't that a great feeling from the farmer in Hounslow, St. Elizabeth, our plant in Hounslow, and bottling here, to the shelves of Walmart, Publix, Winn-Dixie, and all the big chains in the United States, and in the UK, the Tesco's, in Canada. All authentic Jamaican, produced in Jamaica by GraceKennedy Limited. All of you, as shareholders and Jamaicans, you should feel proud of that achievement. And we're on the Prime Network showing it off too. Okay, we have been in the press a lot about digital transformation. And the truth is that COVID-19, we were talking about this for a long time, and most of corporate Jamaica in the world has been talking about digital transformation. It sounded great. But with COVID-19, our consultant said to us that, listen, this is not a matter of nice to have and sounding great. This is a matter of surviving. It's a matter of surviving in your business. And we have made significant progress. Our digital factory is now up and running from February 2021. We have a number of products in the factory. We have 3 that will be launched by the 3rd quarter of this year. And when you speak about digital transformation, people think about only the app. You download this app and it works that way. But it's much more than that. It's about the customer experience. It's about operational efficiency. It's about digital innovation. And I'll share with you some of the work that we have done so far. I was asked a very interesting question by an analyst, a financial analyst, about the competitive advantage of GraceKennedy. Because everybody everybody's talking about digital transformation. And we thought about it as an executive team. And we have great people working for us to execute on the strategy. One of the things that GraceKennedy have is that what I refer to as the GraceKennedy's ecosystem. In other words, when you look at the diverse business that we have and we can cross-sell, that is a kind of a competitive advantage. And you know, in that ecosystem alone, you have 1 million customers. You have 1 million customers. And we have divided it in phases, our prepaid card, just see the picture there, the mobile wallet, and the mobile app. That is going to be, again, a game changer for the GraceKennedy group of companies. If we cross-sell across that ecosystem. And just for the notes, in terms of our commitment to technology and infrastructure, Andrew, we have spent $23.8 million over 5 years on technology and infrastructure. So we are reinvesting very heavily in our business so we can remain in a competitive advantage. These are some of the products that we have been focusing on. Global Access 2 for First Global Bank, and I can tell you, I mean, some of you may call me a little biased, but Global Access 2 is the best online banking platform that I've ever seen or used. Global Access 2 Plus, best. Look at Instacart. Those of you overseas, I'm sure you're familiar with Instacart. Our business with Instacart increased by 400%. 400%. Key Insurance, they gave us a demonstration at the last board meeting. Their online platform, Just Pay, is fantastic. Congrats to Tamara, Stephen, and that team. And Hilo, which is in fact our company secretary, is in charge of that project for me. Hilo is going to be launching an e-commerce, when Gail, in a few weeks. In a few weeks. So I'm really happy about that. So a lot is happening, colleagues. The slide looks busy, as some would say, but the slide looks busy because we are very busy in terms of delivering these products to our consumers. As I said earlier in my presentation, our employees are our greatest asset. I got Naomi Holness, our CHRO. I'm sure she's on. My first day back at work, she said, Don, I have some good news for you. I said, well, what is that? Every year at GraceKennedy, we do what we call an employee engagement score. We do a survey, very professionally done, analyzed. 2019, we're at 66%. I felt okay. We did our benchmarking internationally, and the international benchmark for a really good score, employee engagement, was 65%. So that's all right. We are 1 percentage point above what is considered a good score. We said, Don, at 2020, our employee engagement score has been 71%. This has by far, the highest score ever in the GraceKennedy group of companies. When I saw it, colleagues, I felt good. I felt good because the staff, from a personal basis, from a professional basis, were going through a very difficult time because of COVID-19. But yet still, we saw a significant increase in our employee engagement score. And then I made a statement to my executive team. I said, colleagues, if GraceKennedy wants to continue to do well, we need to get that 71% even higher. And I said it at the investors briefing, and I feel so strongly about it that there's a very, very strong correlation between the profitability of a company and the engagement score of your staff. If you want your profitability to go up, ensure that your engagement of your staff goes up. And that is why I'm so pleased with our GraceKennedy team in terms of their commitment your dedication, your loyalty, your hard work, your sacrifice to this great company. We speak about social responsibility as I wind down, Mr. Chairman. And you know, this is probably my favorite slides. As you can see there, we had champs for 2021. I got a text message saying that, Don, looks like you're ready to run again. Except that your stomach has gotten a little bigger than normal. So, and I wasn't sure how to respond to that. But as you can see there, I'm presenting the trophy to Edwin Allen and Jamaica College. But, you know, 2020 was a very difficult decision for us. We didn't have champs. But colleagues, I had the opportunity to speak to some of the children. And I said children at the meet, displaying their talents. And when I tell you that these children were so happy to participate and to perform, some of them got scholarships. But you know, the truth is that they haven't been socializing at all because, you know, school wasn't being held. And they were so happy that I said, you know, and so safety protocols were very tight. I have to congratulate ISA and the Ministry of Health. I felt really, really good when I saw the happiness of the children when they performed, because they basically were locked away for over 14 months. And I've made a commitment. Next year, GraceKennedy will be 100 years old. And I've sent out a teaser to my team that at 100 years old, we're going to have the best champs ever. And we need to come up with some innovation for the 100 meters at the championships. Other social initiatives, we have scholarships, 21.5 million. This one is so important. The GK Food Bank, and Caroline is very passionate, Caroline, my food. But I had a call with Sujay Boswell, who is the president of the Guild, and oh boy, colleagues, I wish GraceKennedy, I wish we could do more. It's so sad when you hear about the children, and obviously if they are attending University of West Indies, they are the brighter of our children. Not even afford a cup of tea. Some of them go for days without food. Very sad. So Caroline, I want to double this figure here of 7.5 million. The need is there, and we're investing in the future of GraceKennedy. This is a brilliant initiative in terms of the GK Food Bank. Then you see our company secretary, Gail, with a little one. We gave tablets, and we have donated over 10 million in tablets. We have distributed 500 care packages. We also rose to the occasion for St. Vincent, my Caribbean brothers and sisters. We gave 13 million in assistance. And you may not know, but we actually made donations of local aid to the police force, the Jamaica Consolidated Force, the medical doctors, the Ministry of Health and Wellness, and the Jamaica Defense Force. And we gave meals to the frontline workers during the curfew. So, you know, GraceKennedy, we're going to be 100 years old, and you probably have heard the story already that a hard-hitting journalist asked me, "What do you want?" No, he asked, "Why has GraceKennedy survived for so long?" I think it was like 95 years, and other companies have gone under. And I was going to answer in more of a strategic way, speaking about strategy and balance sheet and that kind of thing. And I thought about it, and I said, no. I said, the reason why GraceKennedy has survived, or more than survived, we have done well over the last 95 years at the time, is because of our core values embedded in our DNA by our forefathers. And I learned that when I joined GraceKennedy in 1995. Mr. Rafael Diaz, Peter Solomon, Douglas O'Rain, Professor God Shirley, and many of our other directors. Honesty, integrity, and trust. We care. That is why, my dear shareholders, GraceKennedy has been able to survive and to grow throughout the last 99 years. So our core values, our philosophy of we care, honesty, integrity, and trust. Our word is our bond. We care about our staff, we care about our communities, we care about our shareholders, we care about our environment. That is why GraceKennedy has survived so long, and we will continue to do so as we move towards our GK 100. And I know everybody's looking forward to that. We have a planning committee in place, and we'll report back to our shareholders, I think by the third quarter of this year, what exactly is being planned. But you can be rest assured, for the COVID-19, and as Professor Shirley said, with the vaccination program, we can really get together and have a great 100th celebration. Not a lot of companies in Jamaica reached this milestone. So in closing my presentation, colleagues, let me say is that as executives and a board of directors, we have a great board of directors, I can assure you, who is very supportive to the management team and hold us accountable as they should in terms of performance. I would like to thank our employees, as I said before, our board of directors, and all our frontline workers for their resolute commitment and hard work, showing the true GraceKennedy spirit of we care. Despite the uncertainties presented, we are confident that we emerge stronger together from this crisis. We would like to take this opportunity to thank all our stakeholders for their continued support as we navigate this journey guided by our core values and principles of honesty, integrity, and trust. I thank you very much.
Good afternoon, everyone. And thanks to the chairman and to our CEO, who he has outlined our strategy for next year and all in our community as well. This afternoon, I'm going to give you some brief highlights on our financial performance, mainly for 2020 year end, as well as our first quarter, just a quick overview on our first quarter results as well. So I'm very happy that for 2020, I can report to you that all our key metrics have shown significant growth and improvement. They're all positive for 2020. Starting off with revenue, we are now firmly in the 100 billion mark at 115 billion for 2020, a growth of 12% or $12.3 billion. And what we saw is significant growth in all our areas. In particular, our food trading did very well for 2020. For our operating performance, which is best highlighted through our profit before other income, you can see that that increased by 82%, an increase of $3.1 billion for 2020. And this really is coming from improved efficiencies or cost savings measures, but primarily from improved margins from our companies. In addition to that, our profit before tax showed significant growth. You can see that at $9.7 billion, an increase of 58%. We're almost at the 10 billion mark. So really doing very well for 2020. And what you'll note is that for all of our revenue and profit measures, in particular our profit attributed to shareholders, all of these results are without any one-off gains. So these are core operating performance for 2020, did very well. In terms of our balance sheet, our assets are up significantly in double digits, now up to $171 billion. One of the main drivers of this growth in assets is our cash and deposit position, which grew by $9.7 billion to $24 billion. So in terms of in a year when you have a pandemic, and it's very important to remain liquid, we were able to generate the cash from our profits and significantly improve that position. And then our stockholders' equity, just slightly below $60 billion, a growth of 14.5%. And with the generation of profits, the conversion to cash, and our improvement in our stockholders' equity, we were able to increase our dividend payout for 2020. So just looking at our dividend payout over the last 5 years, you'll note that back in 2016, we were paying out approximately $1 billion. Now we're up to just under $1.6 billion at the end of 2020, an increase of 57% over the 5-year period. And again, in a year with COVID-19, with a lot of uncertainty and the need to remain liquid, we were still able to pay out an increased dividend over the prior year. So we continue to return to our shareholders cash, not only profits, but also cash. In terms of the results of our business segments, in terms of revenue, what you see there is that all our business segments grew in revenue for 2020. What you'll see is we were led by the food trading division. You see that red bar is up to $90.8 billion, an increase of 11.5%. Revenue across all our food companies were very strong. So locally in the Jamaican market, our distribution businesses as well as our retail businesses did well. And internationally, all our international food companies showed growth in revenue for 2020. In terms of banking and investments, modest growth for that segment. And what we did note is that for banking and investments, things like loan growth were moderate, given that some of our customers would have been somewhat hesitant to borrow more during COVID-19. And other clients of our investment company would have taken a wait-and-see approach to go into the market for any corporate funding. In terms of our insurance segment, we saw very good growth for insurance, both organically with our existing insurance businesses. But in addition to that, as many will recall, in the second quarter of 2020, we acquired majority shares in Key Insurance, and that company has added to our revenue base and continues to do better since our acquisition. Also, our associated joint venture, Canopy Insurance, also has shown improved revenue and growth in its customer base. And then money services, we did see good growth for money services as well. In particular, in our digital transactions, we saw a number of digital customers grow by over 400% for 2020. In addition to that, money services did celebrate their 30th anniversary in Jamaica in November of last year. And so it was a milestone year for them as well. Now, in terms of our profits, again, significant growth in profits for 2020. What we saw is money services, that growth in revenue flowing to the bottom line. Insurance as well, showing good performance for that year. With our banking segment, we did see some decline, and as mentioned earlier by our CEO, we did have a situation where we had to make additional impairment provisioning for vulnerable customers and our customers in vulnerable industries. We also had a situation where in the investment portfolio, there would have been some fair value losses with a decline in the Jamaica Stock Exchange index for 2020. So a modest decline there for banking and investments. In our food trading though, what you will see is that red bar for 2020 is almost double what it was in 2019. So our food segment has done really well, just under 100% growth, just under double 96% growth. And you'll note also that for the food segment, that red bar in 2020 is almost the same size as money services. So we're getting better diversification of our earnings and a better distribution of profitability across our segments now. In terms of our financial position, as I mentioned earlier, with our assets, we saw significant growth in our assets, growing to $171 billion for 2020. You'll note too that equity has also grown to $59.9 billion, this yellow bar. And even though debt has gone up slightly, you will note that our debt to equity ratio has actually fallen. So our equity is growing faster than our debt. So we're in a comfortable position in terms of our ability to borrow more. Our borrowing capacity remains very strong going forward. I'll speak a little bit more about on the asset side. In addition to cash going up, we also saw additional investments in capital assets, fixed assets, and IT assets. And I'll speak about that on this slide. In terms of our funds allocation, what you see over the last 5 years, those orange bars, we've consistently invested over $2 billion per annum in capital assets. 2019 was a year that we did significant investments. We completed our new GraceKennedy head office downtown, and we also invested heavily in a new warehouse in New Jersey to improve our USA operations. For 2020, continue to invest heavily. Approximately a quarter of that investment, just under $700 million, is in IT assets. So technology is very important, especially during COVID-19, in terms of reaching our customers who aren't able to engage with us physically. Online options have been made available, and a lot of that is technology driven. In addition to our technology, we continue to improve our distribution capabilities. So our distribution center, we expanded that in Jamaica, and also for high-low stores, we continue to enhance those locations. So continue to invest heavily in capital, and you see that our return on equity has improved for 2020 up to 11.1% now. So that those investments are paying off. In terms of our first quarter 2021, just want to briefly give you an update that since the end of the year, your company continues to grow. And so revenue up $2.5 billion, 8.8%. We're now at $31.4 billion for the first quarter. And of course, if you do the math, a quarter, you earn $31 billion, then chances are very high that by year end, you'll be earning well over 100 billion, continue to earn over 100 billion. You'll also note that for all 4 business segments, the revenue is up. So we continue to see that positive growth that we saw in 2020 continue into 2021 for the first quarter. Some highlights there in terms of the food trading segment. Demand for our brands continues to be strong, especially our Grace-owned brands. And so we're happy about that. In terms of our banking and investments, that has shown improved growth as well. And then for insurance, our acquisition from last year, Key Insurance, continues to grow, as well as our other insurance businesses. And then money services also seeing growth in transactions for the first quarter of this year. On the profit side, another strong quarter of performance, where we see that, again, all 4 of our business segments showed improved profitability for 2021 first quarter. Here we see that our food companies have been growing very well. So not only is the revenue growing, but our margins are improving. So what you'll see is improved profitability there. And also we see a return to profitability on the insurance side, up back in positive territory for 2021. So those are the key highlights I'd like to share with you. Again, your company is focused on ways to remain resilient during this COVID-19 pandemic. It still continues a year later, but your company has been taking the necessary steps to mitigate those risks, and we look forward to improved performance for the rest of the year. Thank you very much.
Thank you, Suzanne. Ladies and gentlemen, I think you will agree we have had excellent presentations from both Don and Andrew. Don outlining the vision of the company to become a global a global group, and laying out the strategy for realizing this, becoming a consumer-centered organization driven by internal processes and systems, the sustainable growth and innovation, and investments in our most valuable assets, our people. You've heard from both Don and Andrew that our performance in a very challenging period has in fact been outstanding and has continued into 2021. All the segments have grown in both revenue and profitability. I think by any standard, it's an impressive corporate report for this very difficult period under review. And we have been guided throughout by an outstanding staff who have worked diligently and consistent with our core principles of honesty, integrity, and trust. Ladies and gentlemen, it's now time to answer the questions that have previously been submitted and those sent in the last few minutes based on the presentations you have just heard. Our time allocated for this section is 30 minutes. If we are not able to answer your questions during this period, we will provide answers that will be posted on the GraceKennedy website. Just a reminder that you can still send questions via the email to agm@gkco.com, as seen on your screen. We will not be able, however, to take questions any longer on the chat box. I will now direct the questions you have submitted to Don Webby, our Group CEO, who will answer questions with the assistance of his executive team. The first of these was submitted by Mr. Felix A. Pereira. And he said, good day, Chairman and Head Table. Given your medium-term goals to list the shares on an international stock exchange, would you consider presenting a summary of your financials in an international currency, example, US dollars? This is done by Guardian Holding Limited, for example. What is the anticipated time frame? The second question is, what is the anticipated time frame for completing the Scotia Insurance Eastern Caribbean Limited portfolio? And the third is, are you considering buying the remaining shares in CSGK Financial Holdings that are currently held by Massey United Insurance? Don?
Thank you very much. Thank you very much, Chairman. Let me answer the last one first. So CSGK actually stands for Cave Shepherd GraceKennedy Holdings, and that company owns 80% of Signia Globe in Barbados, which is now the largest merchant bank in Barbados. Neil and Massey, or Massey, owns 20%. The business in Barbados is doing exceptionally well. We are very happy with the performance. We are very happy with return on investment. So if the opportunity comes up where Massey decides to sell their 20%, GraceKennedy, and I'm sure Cave Shepherd, our partner, will have a serious look in terms of acquisition because we are pleased with that investment. In terms of the Scotia Insurance Eastern Caribbean Limited, It's always very difficult to have a specific timeline when you have to go through the lengthy and regulatory process because it's subject to regulatory approval. However, we are hoping that transaction will be completed by July 31st, 2021, and all indications are that we're on track to complete the transaction by that time. In terms of the international currency, let me start out by saying also that I'll drift a little bit, but at GraceKennedy, we are now in the process of pulling together the details of our 2030 vision, and we have, in fact, we'll engage an international consultant to help us through that process. But one of the objectives that we have in that 2030 vision, which I did share with the board of directors, is actually to list GraceKennedy on an international stock exchange, especially focusing on our food business. If you think about it, GraceKennedy's food business is actually an international business headquartered in Jamaica. And we believe that the market acceptance in any international market will be good. But that's a little ways off, and we are looking at that now. In terms of reporting in a international currency, one of the things that we do, Felix, is that every report that we submit to our board is actually in US dollars. Every measurement of every executive in the GraceKennedy group is actually in US dollars, and that was implemented many, many years ago. So we do, in fact, measure performance at the board level and at the executive level in US dollars. Our group operating document is in US dollars. In terms of reporting in the medium term, that is something that Andrew had asked you and maybe Pricewaterhouse, because it's not as straightforward as dividing the Jamaican dollars by the rate of exchange. There are different accounting principles and rules, IAS versus IFRS, that we have to understand and be careful, because you don't want to just do a simple division and it sends a wrong signal in terms of performance. And do you want to add anything to what I've said?
Thanks, Don. Yes, you're correct. Reporting in a foreign currency has some additional reporting requirements based on the level of earnings of GraceKennedy, which you showed earlier, in terms of our revenue derived outside Jamaica and profits derived outside Jamaica. As you can tell, the majority is still in Jamaica, and so the primary operating currency of the group is still in Jamaican dollars. So that's one of the guiding principles as to why we report in Jamaican dollars. But it's something certainly that going forward, as we close in on our target of earning more outside Jamaica, we'll certainly look at and consider whether using another currency would be more appropriate.
Yeah, but Felix, I want to stress the point that our reporting to the board of directors is in US dollars, and as executive team, our performance is measured in US dollars, which I think at this point, that's the most important metric that we can use for the group at this time. But there's going to be a point in time, as I said, if we decide to go ahead and list on an international stock exchange, then we're going to have to start the process of doing a real conversion of the Jamaican dollar results into US dollars using the accounting principles on that respective stock exchange.
Thank you very much, Don and Andrew. The next question comes from Justin Burke, which came in earlier in the meeting. Justin's comment is, in the last investor briefing, Don, you mentioned that GK was in the final stages of putting Hilo on an e-commerce platform, expected to be rolled out before this AGM. Are there any updates on this?
Sure, there is certainly an update, and let me apologize for running a little bit behind, and primarily because of the impact of COVID and other internal issues that we're running slightly behind. But the good news is that we're actually in the testing phase, and the feedback that I've been getting from the lady on my right here, it has been very positive. And I think in a few weeks we'll be able to roll out high-low e-commerce to the public. Gail, you want to add anything to that?
Yes, John, thank you for that. The high-low e-commerce platform is actually a really fantastic platform. I think that persons are going to be very happy with it. It's in the testing phase. We have invited those persons that used to use the delivery service to test it for us, to test the site and to test the app. I actually have the app on my phone. It has some amazing features where you can keep your weekly and monthly lists and then add and subtract from them. And so the chairman nodding at me as if he's the one that actually does that.
He's a big customer of
He's looking forward to utilizing that feature. It also has another one where you can scan the barcode of something that could be in your cupboard or a new bottle of wine at a restaurant, and it goes straight into your list. So it has some phenomenal features. What we're really testing right now is for the customers who were using it at Fairview, also Manor Park, Ligani, and Barbican. They're in a control test group to give us some feedback. And importantly, the team led by Simon Roberts, who used to be our CIO, along with the team on the ground, Catherine Kennedy, our GM, they've really worked very hard, and they're giving us a lot of good feedback, so we ensure that it's a perfect platform when we launch in the summer. And importantly, it will be GDPR compliant, so people can feel very secure in using their credit card or debit card. So we have had a little bit of delay, but it's going to be worth the wait.
Thank you, Chair. One of the things that I'm sure the shareholders would have picked up on is how is our company secretary answering questions on high-low e-commerce. But what we do at GraceKennedy, Chair, is that we run a lot of cross-functional teams, regardless of your expertise in one area. So you'd find that Gail and others are working in areas like e-commerce, which we find actually motivate the team in terms of doing other things in the group to drive performance. So thanks, Gail.
Thank you very much, Don and Gail, for those responses. And Justin, we may be running a little bit behind on this, but as Don and Gail have said, we are moving full steam ahead on that initiative. The next question comes from Philip Burgess, who is a shareholder. He says, congratulations and thank you for the excellent job done over the years, and in particular during the challenging 2020 year. What are the company's plans to expand deeper into the local tourism industry food supply chain, given opportunities that may have arisen out of the fallout from the pandemic?
That's a great question. So in terms of expansion, there are a couple of things that we have been looking at. One of which it could be an acquisition or a merger with an existing player in that market, so we get the economies of scale. The other is that we are investing behind our food services team to expand. One of the things I can say, Philip, is that I believe that this is going to be a huge opportunity for GraceKennedy going forward in terms of the food services business. And it is actually a win-win. I'll tell you a little story. Before the pandemic, and I was in Florida, in the Walmart aisle, I saw some non-Caribbean consumers picking up the Grace product, and of course, doing my own little market research, I said, "How did you hear about Grace?" They were actually visitors to Jamaica, and they saw the Grace brand on the table of the hotels, and they picked it up and they loved it, and now they are buying it in the USA market. So it can be a win-win. So we are going to be investing very heavily, whether by a merger or an acquisition, building the team to expand in that area. But it's going to be a focus for us in terms of revenue and profitability growth going forward. And I'm sure you'd have seen recent news release that there's going to be 1,000 new rooms very shortly. So we expect that that sector in Jamaica will continue to grow, and we intend to play a significant part in that regard.
Thank you, Philip, for the question, and Don for the responses. I have 2 questions from Al Edwards. The first is, rising inflation is a concern. How worried are you about the inflationary impact on your food products? What do you see in this regard, both in Jamaica and internationally, vis-a-vis Grace's operations? The second question is, at this point, 60% of your revenues are from outside Jamaica. With the world economy expected to come back on stream in 2022, can you see that increasing to around 70% over the next 3 to 4 years?
Is setting some stretch targets for us. What I'll say, and I'll have to put it into perspective, that we also see the Jamaican economy growing over the next few years. So what we're saying is that the USA or international market will grow faster than Jamaica. So it's not a straight mathematical exercise. It's a relative exercise in terms of that 60%. I would say we are fairly confident that by 2025, we are now at 46%, as I had shown in my presentation, that we should be able to reach that 60%. However, I must point out to you, in terms of our mergers and acquisition pipeline, we have a number of companies outside of Jamaica, both in food and financial services, that we are looking to acquire. But when we are doing our planning, I would not include that in terms of that 60%. So you're correct in the sense that if we do some of these acquisitions, we could reach a 60% faster. But as we speak now, we're targeting 2025 through organic growth to reach the 60% growth by 2025. 70%, I would think that would be more a part of our 2030 vision. I don't see why not, based on the current growth rate and acquisition strategies, that we should be able to reach 70% certainly by 2030. But again, I want to stress the point that we see the Jamaican economy growing, and GraceKennedy intends to have our market share continue to be the dominant share in the Jamaican market. And we're going to be launching a number of new products and services in this market, which will also create some growth opportunities. The question, Alan, is actually a very good one. And, you know, Zach and Frank and myself have been having a discussion on this. I don't like to use the word worried about inflation. I think if you look and see what is happening, as I said in my presentation, where freight rates out of Asia is growing by 300%. We've been getting a lot of notices in terms of the packaging, both cartons and alumina, increases, some of up to 30%. You'd have seen in the press about some of the grains and wheat going up significantly. In discussing with my head of logistics and purchasing earlier this week, we don't believe that this increase will continue. We believe over the next 12 months, we see that the prices will, with strong negotiations, will come back to the pre-COVID levels. But let us watch and see. In the meantime, GraceKennedy, we are keeping focus in terms of what is within our control, in terms of maintaining reducing our other costs, and see how we can become more efficient in our manufacturing companies, and more efficient in our distribution system. So any inflationary impact that these price increases will have, we will manage that to our consumer pricing, because at the end of the day, it's going to be market driven. There's one, Chair, which I asked Gail to answer, since she's the executive lady around the table. Mr. Webby spoke about his leadership team having more women than men, but what about the rest of the company? So since she's a lady, I'll ask her to answer the question, although I know the answer.
Chairman, I've been waiting for this question for years. So it's actually one of the many reasons that I'm proud to work at GK. And this is a question that used to come up quite a bit in AGMs and hasn't come up recently and has not come up since I've worked at GraceKennedy. But the truth is that we are a predominantly female company. 56% of our employees are females, and 63% of our executives, that means people in leadership roles, are female. And so I'll just list some of the females across the group. So we do, Mr. Webby did mention that on the executive committee, that's the senior leadership team of the company, that 5 of the 9 members are women, and that is so. It does comprise of Andrea Coy, Grace Burnett, Mariam McIntosh Robinson, Naomi Holness, and myself, alongside Mr. Webby, Mr. Mesado, Steve Whittingham, and Frank James. So we do outnumber them there. And we also have Grace Burnett as the CEO of the financial group. We also have Mariam McIntosh Robinson as president and CEO of the bank. Margaret Campbell is country manager for GKMS Jamaica and also COO for the GKMS group. GK Insurance Brokers Turks and Caicos is headed by Marie Beckford. Tamara Glave-Susie was appointed GM of Key Insurance Company in 2020
doing a fantastic
last
job.
year, and she's doing a very good job. And of course, Andrea Coy was appointed as CEO of GK International Foods in 2018 and took on the role as the GM for the UK business as well later on. And in fact, all of the companies in the financial group, except GK Cap and GK General, are headed by females. So Amanda Beepat, Grace Burnett, Mariam, and Tamara, who we mentioned earlier. And in the foods business, we have Andrea Coy, Tamara Garel Thompson, Diane Robinson, Deborah Dodd, Renee Nathan, Catherine Kennedy, and Daniel Daly Longman. And in the corporate office, we have myself, Naomi Holness, Leanne Bruce, Judith Chung Gordon, Deidre Cousins, Glenise Durant Freckleton, Suzanne Stanley, and Terry Ann Graver, who all lead departments in the executive office. So I think it's fair to say...
So now you know who runs GraceKennedy.
that it's not just the senior leadership team, the executive committee, that is
So the truth is,
women.
Chairman, as I said, without sincerity, we have a great team. And these ladies are there, not because they are ladies, but because they are excellent in the job that they do. Chair, I didn't want it to pass without Mr. Staple getting a voice. Can I just ask,
Sure.
with your permission?
Please.
I wasn't joking or anything. So, Mr. Mesado, page 188, goods in transit, and page 125, pensions. Will goods in transit issue significant increases in GK expenses?
Thanks.
And then the question about the pension.
Okay, thanks for that, Mr. Staple. So yes, you'll note on page 188, which shows in note 8 or inventories, that the item goods in transit did go up from $1.6 billion to $1.8 billion. And what that really is about is, as we mentioned, there have been challenges with logistics for 2020 and continue to be, as you've been hearing in the news. Globally, there has been various constraints on the supply chain of goods across the world, whether it is backups at the ports or delays in manufacturing. And this has resulted in more goods being on the high seas or being in transit. It also requires GraceKennedy to order ahead to make sure that we can meet the demand. So our goods in transit did increase in 2020 for this reason. In terms of the impact on the income statement, as mentioned earlier in the meeting, there have been increases in things like freight rates and other transportation costs across the globe, and therefore we do see some increases there. We don't expect these increases though to be permanent, and so it's something we monitor very carefully, something that we, because of those cost increases, then we have to look at other cost savings measures so that we don't have to pass on those costs fully to our customers. So that is the major way we're mitigating against the logistic issues that have come up since 2020. Now, in terms of page 125, so this is on the, okay, it may be 126 for pensions. On the other comprehensive income, we see a line, remeasurement of post-employment benefits. In 2020, we see a positive $1.2 billion, and in 2019, it was $3 billion. And I think the question really has to do with, well, why is it positive and why is it not as high in 2020 as it was in 2019? So in 2019, there were a certain set of actuarial assumptions, one of which had the impact of reducing the post-employment obligations or pension or other post-employment liabilities. And so you had a positive impact because those liabilities went down in terms of the fair value or the present value of those liabilities. And in addition, in 2019, you had an increase in the pension assets. So that's contributed to the $3 billion. In terms of 2020 now, those actual assumptions would not have reduced our liabilities in 2020. However, our pension assets, the pension surplus shown on the balance sheet, will note went up by just over $1 billion. And so the majority of this increase in 2020, the 1.2, is in relation to an increase in the pension surplus asset on the balance sheet.
Here, I have one question from David Rose. I think David is from the Jamaica Observer. Most of us know David as the person who asks most questions as it relates to key insurance at their AGM. Hi, David. How you doing? This time is about food. Has GK's food network in the USA mitigated the risk to the supply chain, including commodity prices? So let me try and explain, David, how our group is structured in terms of how do we mitigate risk. So every year, as a group CEO, I have to present to the GraceKennedy Board of Directors, our chairman, Professor Gordon Shirley, the top 10 risks for the GraceKennedy group. And this is pre-COVID. As a food company, one of the risks that we have always have on our top 10 risk is the supply chain. Anything can happen. Hurricane, earthquake, because we buy from a number of countries all over the world. And we have various mitigating actions. One of the mitigating actions that we have is that in certain cases, based on what is in the international market, that we actually have fixed term contracts. In other words, we fix the price, and we have futures that we buy for 6 months at a certain price. Zach Mars, who is our head of purchasing, has done an exceptionally good job in terms of managing that risk by entering into a number of contracts. We also have a number of suppliers that we deal with, so we don't have to rely on one supplier in terms of price increases, etc. We put ourselves in a negotiating position. But most importantly, we have a central purchasing unit at the GraceKennedy Group. We asked about the USA. So we buy centrally for our markets, the USA, Canada, UK, the Caribbean. And that put us in a better position in terms of purchasing strength and ability to negotiate with our suppliers. And we get what I describe as a helicopter view of pricing of commodities throughout the world. So to answer your question is that we enter into a number of contracts with our suppliers. There are future contracts with fixed prices, and that is how we primarily mitigate against the risk. You'd notice that on our balance sheets that we have actually made a decision from early March 2020. It is better to have an oversupply of inventory or overstock of inventory than a shortage, because we saw this coming in terms of COVID-19 and the shortages of some of our main products that we sell to our consumers and for our manufacturing companies. So we're managing it well. The future is very uncertain. I'm concerned, but I think we're managing it well as we speak. We will. This too shall pass. So David, hopefully that answers your question. that you had asked about the mitigation of the risk.
Thank you very much, Don. Our time allotted for this question and answer segment has just about run out. However, as I indicated to you earlier, responses to any questions that were not answered today or that come in after this is completed, we will try to have these posted on the GraceKennedy website very quickly today or tomorrow. I now turn to the auditor's report, the director's report, and statement of accounts. The auditor's report, the director's report, and the audited group accounts have been circulated to the shareholders. I will now ask Mr. Paul Williams of PricewaterhouseCoopers to read the auditor's report. Paul?
Thank you very much, Mr. Chair. Independence Auditor's Report to the members of GraceKennedy Limited. Report on the audit of the consolidated and standalone financial statement. Our opinion. In our opinion, the consolidated financial statements and the standalone financial statement give a true and fair view of the consolidated financial position of GraceKennedy Limited, the company, and its subsidiary, together the group, and the standalone financial position of the company as at December 31st, 2020, and of their consolidated and standalone financial performance and their consolidated and standalone cash flow for the year then ended in accordance with International Financial Reporting, Ifrs, and with the requirement of the Jamaican Companies Act. We have audited the group consolidated and standalone financial statement comprise the consolidated statement of financial position as at December 31st, 2020, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flow for the year then ended, the company statement of financial position as at December 31st, 2020, the company income statement for the year then ended, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flow for the year then ended, and the notes to the financial statement, which include significant accounting policies and other explanatory information. Basis for opinion. We conducted our audit in accordance with International Standard on Auditing, ISAs. Our responsibility under those standards are further described in the auditor's responsibility of the audit report of the consolidated and standalone financial statement section of our report. We believe the audit evidence we have obtained is sufficient and appropriate to provide the basis for our opinion. Independence. We are independent of the group in accordance with International Code of Ethics for Professional Accountants, including International Independent Standard issued by the International Ethics Standard Board of Accountants, IESB code. We have fulfilled our other ethical requirements in accordance with the said code. Our audit approach. Audit scope. As part of designing our audit, we determine materiality and assess the risk of material misstatement in a consolidated and standalone financial statement. In particular, we consider where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all our audit, we also address the risks of management override of internal controls including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. How we tailor our group audit scope. We tailor the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statement as a whole, taking into account the structure of the group, the accounting processes and control, and the industries in which the group operates. In assessing the risk of material misstatement of the group's consolidated financial statement, and to ensure we had adequate quantitative coverage of significant accounts in the consolidated financial statement, we design and perform our audit procedure over various components. The group comprised 45 reporting components, of which we selected 23 components, which represent the principal business unit of the group and cover entities within Jamaica, Barbados, Cayman Islands, Trinidad and Tobago, Canada, the United Kingdom, United States of America, and Guyana. Of the 23 components selected, we perform an audit of the complete financial information of 13 components, full scope components, which were selected based on their size, risk characteristic, or both. For the remaining 10 components, specified scope component, we perform audit procedure and specific accounts within that component which we consider at the potential of the greatest impact of the significant accounts in the consolidated statement, either due to the size of these amount or their risk profile. In relation to the remaining component, none of which are individually greater than 3% of the group profit before tax, we perform other procedures, including analytical review procedures, testing of consolidated journal entries, intercompany eliminations, and foreign currency translation recalculation to respond to any potential risk of material misstatement to the group consolidated financial statement. For components that are in scope of the group audit, we use component auditors from PwC network firms and non-PwC firms who are familiar with local laws and regulations to perform this audit work. Throughout the audit, we had regular meeting and correspondence with management and component audit team to follow up on progress of the work of all components. The group engagement team reviewed working papers relating to the audit approach and findings of the component auditors. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statement for the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statement as a whole and informing our opinion thereon. We do not provide a separate opinion on these matters. Key audit matters. The first key audit matter which we identify, accounting for a business combination specifically to the group. Refer to notes 2B, 41, 49, note 11, and note 39 to the consolidated and standalone financial statement for disclosure of the related accounting policies, judgment, estimates, and balances. On the 24th of March 2020, the group acquired 65.2% of the share capital of Key Insurance Company Limited. Management assessed that the acquisition qualified as a business combination, resulted in the recognition of goodwill in the amount of $171.9 million. Valuation of identifiable net assets acquired were performed as part of the purchase price allocation, PPA, which resulted in the group recognizing intangible assets in the amount of $147 million and $38 million for customer-related assets and brands, respectively. We focus on this area due to the significance of the intangible asset identified and due to the nature of business combination. The accounting requirement of which can be complex, require management to exercise judgment in determining certain estimates. The most significant is the determination of the PPA. Management engaged external experts to assist with the determination of the PPA, which encompass identifying the assets and liabilities acquired and determining their fair value, and determining in particular the valuation of intangible assets, as the methodology involves significant error of judgment, which are based on the inputs and assumptions in the model, such as business growth rate, attrition rate, future margin, and discount rate. Our audit addressed this key audit matter. We read the share purchase agreement and evaluate the appropriateness of the accounting for the acquisition as a business combination against management accounting policies and the applicable accounting standard. We held discussion with management to understand and evaluate the basis for determining the assumptions. With the assistance of our own valuation experts, we assessed the reasonableness of the fair value conclusion derived from the assets and liability acquired. This includes evaluating the appropriateness of the valuation methodology utilized to derive the fair value of identifying tangible assets and evaluating the reasonableness of the underlying valuation assumptions and inputs. We achieved this by corroborating the key variables, being the business growth rate, attrition rate, future margins and discounts rates, to historic and prospective financial, industry, and economic information, taking into consideration our own knowledge of the group and its industries. Where relevant, we consider third-party source and challenge management future revenue estimates, considering changes in the market or actions by competitors. We recalculated the goodwill, being the difference between the total net consideration paid and the fair value of the net assets acquired for mathematical accuracy. Based on the audit procedures performed, management accounting, judgment, and estimates relating to the business combination were not unreasonable. Second key audit matter, Ifrs 9, financial instruments, in particular, probability of default, forward-looking information, and significant increase in credit risk, particularly for the group. Refer to note 2H, 3C1, 48, note 9, to the consolidated and standalone financial statement for disclosure of related accounting policies, judgment, estimates, and balances. As of 31st December 2020, the group loans and advances total $31.3 billion, net of credit losses. The above balance represents 18% of total assets of the group at the reporting date. The resultant impairment recorded under the expected credit loss model, the ECL, amounted to $1.3 billion. In assessing impairment, Ifrs 9 prescribed forward-looking ECL impairment model, which takes into account reasonable and supportable forward-looking information, as well as probability of default, PDs. Probabilities of default represent the likelihood of a borrower defaulting on its obligation over the next 12 months or over the remaining life of the obligation. For loans and advances, management developed PDs based on the group's specific historical default rate for each industry classification. In performing historical analysis, management identified economic variables impacting credit risks and ECLs for each portfolio. The economic impact of COVID-19 resulted in significant increase in credit risks for a number of borrowers who migrated from stage 1 to stage 2 based on an assessment of the industry in which the borrower operates and other relevant factors. In the event of significant increase in credit risks, an allowance or provision is required for ECL, resulting from all possible default events over the expected life of the financial instrument. Lifetime ECL. The estimation and application of forward-looking information requires significant judgment. Stage 1 and Stage 2 credit loss allowances are modeled based on macro variables or changes in macroeconomic variables, which mostly closely correlated with credit loss in a relevant portfolio. Each macroeconomic scenario use the ECL calculation incorporate forecasts of the relevant macroeconomic variable. The estimation of ECL in stage 1 and stage 2 is discounted probability weighted estimates that consider a minimum of 3 future macroeconomic scenarios. The base case scenario is based on macroeconomic forecasts, which are publicly available. Upside and downside scenarios are all set relative to the base case based on the reasonable possible alternative macroeconomic conditions. Additional adjustment to the best case, and the worst case scenario weighting were required as a result of the COVID-19 pandemic. We focus on this area due to the impact of COVID on credit risk, the complexity of technique used in determining PDs, and identify significant increase in credit risk, and the number of significant judgments made by management regarding possible future economic scenario. Our audit addressed this key audit matter by our approach in addressing the matter involved the following procedures, among others. Update our understanding of management's ECL model, including any change in source data and assumptions. Tested the completeness of all loans and advances to determine whether all items were included in the ECL model by agreeing the model to detail loan listing. Evaluated the reasonableness of management judgment pertaining to the PDs, the significant increase in credit risk, forward-looking information, including macroeconomic factors impacting the weighting of the scenarios due to negative impact of COVID-19 as follows. So for the PDs, we test critical data fields using the ECL model for the PD determination, such as default rate, effective interest rate, write-off data, loan type by tracing data back to source document. We also reperform the calculation of days past due, a key data input in the PD parameter in the group banking system on a sample basis. With respect to the significant increase in credit risk, we evaluated staging of the loan and advances by identifying the industry severely impacted by the pandemic. These include industry affected by restriction imposed by government in countries where the group operates. We also evaluated whether the loans of borrowers from these industries migrated to stage 2 were appropriate. With respect to forward-looking information, we assessed the reasonableness of the group methodology for determining economic scenario, including the appropriateness of gross domestic product, unemployment rate, economic factors utilized by management. We evaluated the reasonableness of the increase in the weighting used for the worst case scenario by agreeing the forward-looking economic information to external source published or pronounced by reputable third parties. We sensitize the probability weighting using the ECL calculation as well. The result of our procedure indicate that the assumption used by management for determining the probability of default, significant increase in credit risk, and forward-looking information were not unreasonable. The third key audit matter, goodwill impairment for the United States of America operations. Refer to notes 2G, 4.1, and note 11 to the consolidated and standalone financial statement for disclosure of related accounting policies, judgment, estimates, and balances. The total current value of goodwill at the reporting date is $1.8 billion, of which $1.06 billion relate to the U.S. operations. In accordance with IAS 36, Impairment of Assets, management performed an annual goodwill impairment assessment to determine whether the current value exceeded the recoverable amount of the cash generating unit, the CGU, to which the goodwill is allocated and is therefore impaired at the reporting date. Goodwill relating to the recoverable amount of a CGU is calculated as the higher of the value in use and fair value less costs of disposal. Management determined the recoverable amount by reference to the value in use, which is based on discounted cash flows, projections, over which management made significant judgment and key inputs. As a result of the assessment, management determined there were no impairment as of 31st December 2020. We focused on this area as the Goodwill impairment assessment requires significant management judgment and estimation, is sensitive to changes in key assumptions, and due to the challenges involved in determining the impact of COVID-19 on these assumptions. The key assumptions were assessed by management as being the revenue growth rate, the discount rate, the earnings before interest, tax, depreciation, and amortization, EBITDA, to revenue, and capital expenditure to revenue. We address this key audit matter by our approach in assessing the matter with the assistance of our evaluation expert involved the following procedure, among others. Update our understanding of management's approach to performing their annual impairment assessment. This includes the process by which management key assumptions and methodologies were developed and assessing their appropriateness. We compare previous forecasts to actual results in order to assess the performance of the business and the extent to which reliance could be placed on management ability to forecast. Tested key assumptions including the impact of COVID-19 on those key assumptions as follows. Evaluated the revenue growth rate and the discount rate against valuations of similar companies. Evaluated the EBITDA and capital expenditure to revenue assumption against internal and relevant external derived data where available. Tested the calculations for mathematical accuracy and assessed the sensitivity of the calculation by varying the key assumptions and adjustment within management's cash flow forecast. The result of our procedures indicate management determination that goodwill was not impaired at the reporting date was not unreasonable. The fourth and final key audit matter relates to the valuation of the defined benefit pension scheme and other post-retirement obligation for the group and the company. Refer to notes 2M, 4.3, and note 14 to the consolidated and standalone financial statement for disclosure of related accounting policies, judgment, estimates, and balances. The group has a defined benefit pension scheme and other post-retirement obligations, which are significant in the context of the overall statement of financial position of the group and the company. Pension obligations total $31.8 billion for the group and the company at the reporting date. The pension scheme obligations are included as part of the net pension asset of $6.8 billion on the respective statement of financial position. Other post-employment obligation amounting to $5.9 billion and $2.9 billion for the group and the company respectively. We focus on this area as the valuation of the defined benefit pension liabilities and other post-employment obligations require significant levels of judgment and technical expertise in determining appropriate assumptions. A number of key assumptions can have a material impact on the calculation of the liabilities and obligations, including salary increases, inflation rate, pension increases, discount rate, and mortality rates. Management use external actuaries to assist in determining these assumptions and in valuing the defined benefit pension scheme and other post-employment obligations. We perform procedures on the valuation of the pension scheme and other post-retirement obligations as follows. We evaluated management's assumption made in relation to the valuation of the defined benefit pension scheme and other post-retirement obligations, and the assumption relating to salary increases, pension increases, mortality rates, and by comparing them to national and industry statistics and averages. We agreed the discount rate and the inflation rate used in the valuation of the pension scheme and other post-employment obligations to those issued by the Institute of Chartered Accountants of Jamaica and targets set by the Bank of Jamaica. With the assistance of our own actuarial expert, we perform inquiries with management and management external actuaries and perform an evaluation of the key economic assumptions used, including the impact of COVID in the calculation of the liability. We tested the completeness and accuracy of data extracted and supplied to the group actuaries, which is used for the actual calculation. Based on the audit evidence obtained, we determined that the available audit evidence supported the data and the assumption used by management in the actual valuation. Other information. Management is responsible for other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statement and our audit report thereon, which is expected to be made available to us after the date of our audit report. Our opinion on the consolidated and standalone financial statement does not cover other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statement, our responsibility is to read the other information, identify above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statement, or our knowledge obtained in the audit, or otherwise appear to be materially misstated. When you read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statement. Management is responsible for the preparation of the consolidated and standalone financial statement that give a true and fair view in accordance with Ifrs and with the requirement of the Jamaican Companies Act, and for such internal control as management determine is necessary to enable the preparation of the consolidated and standalone financial statement that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statement, management is responsible for assessing the group's and the company ability to continue as a going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting unless management either intend to liquidate the group or the company or cease operation or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and the company financial reporting process. Auditor's responsibility for the audit of the consolidated and standalone financial statement. Our objective are to obtain reasonable assurance about whether the consolidated and standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an audit report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISA will always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decision of users stating on the basis of these consolidated and standalone financial statements. As part of an audit in accordance with ISA, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatement of the consolidated and standalone financial statement, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and the company internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosure made by management. Conclude on the appropriateness of management use of going concern basis for accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cause significant doubt on the group or the company ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our audit report to the related disclosure in the consolidated and standalone financial statement, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained to date of our audit report. However, future events or conditions may cause the group or the company to cease to continue as a going concern. Evaluate the overall presentation, structure, and contents of the consolidated and standalone financial statement, including the disclosure on whether the consolidated and standalone financial statement represent the underlying transaction and event in a manner that achieves fair presentation. Obtain sufficient, appropriate audit evidence regarding the financial information of the entities or business activities within the group. Express an opinion on the consolidated financial statement. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. We also provide those charged with governance a statement that we have complied with all relevant ethical requirements regarding independence and to communicate with them all relationships and other matters that may reasonably be thought to be bear on our independence, and where applicable, actions taken to eliminate threat or safeguard apply. From the matters communicated to those charged with governance, we determined those matters that were of most significance in the audit of the consolidated and standalone financial statement of the current period and are therefore key audit matters. We describe these matters in our audit report unless laws or regulation precludes public disclosure about the matter, or when extremely rare circumstances we determine that the matter should not be communicated in our report because the adverse consequences of doing so would reasonably expect to outweigh the public interest benefit of such communication. Report and other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been kept so far as appear from our examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith and give the information required by the Jamaican Companies Act in a manner so required. Engagement partner on the audit resulting in this independent audit report is Paul Williams, signed PricewaterhouseCoopers Chartered Accountant, the 26th of February 2001, Kingston, Jamaica. Thank you.
Thank you very much, Mr. Williams. May we have a motion that the director's report be taken as read? Shareholders are reminded to use the raise hand feature to move or second this motion. It has been moved by Mrs. Grace Burnett.
Seconded by Terry Ann Graver.
And seconded by Terry Ann Graver. I would now ask that the second resolution, shareholders are duly nominated proxies. I invite you to cast your votes by clicking the for or against button on your screens. You have 30 seconds to vote on this resolution. The results are in, and as we can see from the screen, we have 100% in favor. I declare the motion carried. Will the Secretary please table the reports together with the audited group accounts?
So table, Chair.
May we have a motion that the audited group accounts for the year ended December 31st, 2020, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. The registrar has advised that we are in receipt of 65 votes by proxy in favor of this resolution, representing 18.9% of the issued share capital of the company. Shareholders and proxies are reminded to use the raise hand feature to move or second this motion. I would now ask that the third resolution be moved.
Camille Mundell Barrett.
The resolution has been moved by Camille Mundell Barnett.
And seconded by Leanne Bruce.
It has been seconded by Leanne Bruce. Shareholders and duly nominated proxies, I invite you to cast your vote by clicking the for or against button on your screens. You have 30 seconds to vote on this resolution. The results are in, and as you can see, those in favor have it. I declare the motion carried. We now come to the approval of dividends. May I have a motion that, as recommended by the directors, the interim dividend paid on the 6th of April 2020, 15th of June 2020, the 24th of September 2020, and the 15th of December 2020 be, and they are hereby declared as final, and no further dividend be paid in respect of the year under review. The registrar has advised that we are in receipt of 65 votes by proxy in favor of this resolution, representing 18.9% of the issued share capital of the company. Shareholders and proxies are reminded to use the raise hand feature to move or second this motion. I now ask that this fourth resolution be moved.
Osborne, Chair.
The resolution has been moved by Terence Osborne.
Seconded by Philip Burgess.
And it has been seconded by Mr. Philip Burgess. Shareholders and duly nominated proxies, I invite you to cast your vote by clicking the for or against button on your screens. You have 30 seconds in which to vote on this resolution. The results are in, and those in favor have it. I declare the motion carried. The next item is the election of directors. I'm pleased to introduce to you our newest director, Mr. Peter Williams, who has been appointed to the board on April 1, 2021. Mr. Williams is a retired partner of the PricewaterhouseCoopers Jamaica assurance practice. He has 4 decades of experience in accounting, assurance, and consultancy services. Mr. Williams is a fellow of the Institute of Chartered Accountants of Jamaica and the Chartered Association of Certified Accountants. Further details on Mr. Williams's and all our board directors, the background of Mr. Williams and all our board directors are available on our website and in our 2020 annual report. Under Article 108 of the company's articles, Mr. Williams, having been appointed to the board since the last annual general meeting, will retire from office and, being eligible, offers himself for election. May we please have a motion that Mr. Peter Williams be and is hereby elected a director of the company. The registrar has advised that we are in receipt of 65 votes by proxy in favor of the resolution, representing 18.9% of the issued share capital of the company. Shareholders are reminded to use the raise hand feature to move or second this motion. I would now ask that the 5th resolution be moved.
Andrew Leorini.
The motion has been moved by Mr. Andrew Leorini.
Seconded by Director Paris Leoai Jr.
It has been seconded by Director Paris Leoai Jr. Thank you. Shareholders and duly nominated proxies, I invite you to cast your votes by clicking the for or against button on your screens. You have 30 seconds in which to vote on this resolution. The results are in, and as can be seen on your screens, those in favor have it. I declare the motion carried. We turn to the directors retiring from office. Directors retiring from office by rotation are Mrs. Mary Ann Chambers, Dr. Paris Leoai Jr., Mr. Everton McDonald, and Mr. Andrew Masado. Mrs. Mary Ann Chambers, I don't think that's Mary Ann's image. Mrs. Mary Ann Chambers, who resides in Canada, is a retired bank executive and former Ontario Cabinet Minister. She is a member of GraceKennedy's Audit Committee and Corporate Governance and Nominations Committee. Her areas of expertise are banking, technology, and corporate governance. Dr. Paris Leoai Jr. is a director of the Mona Geoinformatics Institute and a senior lecturer at the University of the West Indies, Mona. He's a member of the GraceKennedy's Audit Committee, the Corporate Governance and Nomination Committee, and the Compensation Subcommittee. Dr. Leoai's expertise is in the area of technology and data analytics. Mr. Andrew Masado is GraceKennedy's Group Financial Officer. He's a finance and accounting professional and a fellow of the Institute of Chartered Accountants of Jamaica. Mr. Masado joined the company in 1990 and has held various positions within the corporate finance and accounting department, including financial analyst, financial accountant, group financial manager, and group controller. All directors presented here have an excellent record of board meeting attendance and participation. The board is satisfied that the directors continue to make a valuable contribution to the board and have demonstrated their commitment to continue serving as a director. Further details on our directors are available on the GraceKennedy website and in your annual report. Mr. Everton MacDonald, who will be retiring from the board of directors, will not be offering himself for re-election, having reached the mandatory age for retirement under the company's Articles of Incorporation. Mr. MacDonald served the board with distinction for 10 years and has also chaired the audit committee. I take this opportunity on behalf of GraceKennedy, of the GraceKennedy board and the entire GraceKennedy family, to thank Mr. MacDonald for his exemplary service to our company over many years, and look forward to his continued association with GraceKennedy in a new capacity. Thank you very much, Mr. MacDonald. The directors retiring from office by rotation pursuant to the Articles 102 of the company's Articles of Incorporation are Mrs. Mary Ann Chambers, Dr. Paris Luayi Jr., Mr. Everton MacDonald, and Mr. Andrew Mesado. Mrs. Mary Ann Chambers, Dr. Paris Luayi Jr., and Mr. Andrew Mesado, being eligible, offer themselves for re-election. Mr. MacDonald, who will be retiring from the board of directors, will not be offering himself for re-election. May we have a motion that the directors retiring by rotation and offering themselves for re-election, that is, Mrs. Mary Ann Chambers, Dr. Paris Luayi Jr., and Mr. Andrew Mesado, be re-elected en bloc. The registrar has advised that we are in receipt of 65 votes by proxy in favor of this resolution, representing 18.9% of the issued share capital for the company. Shareholders and proxies are reminded to use the raise hand feature to move this or second this motion. I would now ask that the sixth resolution be moved. The motion has been moved by Dion Roden, and it has been seconded by Terence Osborne. Thank you. Shareholders are duly nominated proxies. I invite you to cast your vote by clicking on the for or against button on your screens. You have 30 seconds on which to vote for this resolution. The results are in, and as can be seen on your screen, those in favor have it. I declare the motion as having been carried. May we therefore please have a motion that Mrs. Mary Ann Chambers, Dr. Paris Luayi Jr., and Mr. Andrew Mesado be, and they are hereby re-elected as directors for the company. Registrar has advised that we are in receipt of 65 votes by proxy in favor of the resolution, representing 18.9% of the issued share capital of the company. Shareholders and proxies are reminded to use the raise hand feature to move or second this motion. I now ask that the seventh resolution be moved. This resolution has been moved by Ms. Cilla Johnson, and it has been seconded by Ms. Nadine Butler. Thank you. Shareholders are duly nominated proxies. I invite you to cast your votes by clicking the for or against button on your screens. You have 30 seconds on which to vote on this resolution. The results are in. Those in favor have it. I declare the motion carried. May we have a motion that the amount shown in the accounts of the company for the year ended the 31st of December 2020 as fees to the directors for their services as directors be and are hereby approved, and B, that the fees of the directors for the year ending 31st of December 2021 be fixed by the Compensation Subcommittee, a subcommittee of the Corporate Governance and Nomination Committee of the Board of Directors. The registrar has advised that we are in receipt of 65 votes by proxy in favor of this resolution, representing 18.9% of the issued share capital of the company. Shareholders and proxies are reminded to use the raise hand feature to move or second the motion. I now ask that the 8th resolution be moved. By? The motion has been moved by Mr. Fred Kennedy. It has been seconded by Grace Burnett. Thank you, Fred and Grace. Shareholders and duly nominated proxies, I invite you to cast your votes by clicking the for or against button on your screens. You have 30 seconds on which to vote for this resolution. Those in favor have it. I therefore declare the motion carried. We turn to the appointment of auditors. The auditors of the company, PricewaterhouseCoopers Chartered Accountants, will continue in office pursuant to Section 154 of the Companies Act. May we please have a motion that PricewaterhouseCoopers Chartered Accountants, having signified their willingness to serve, continue in office as auditors of the company pursuant to Section 154 of the Companies Act to hold office until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors of the company. The registrar has advised that we are in receipt of 65 votes by proxy in favor of the resolution, representing 18.9% of the issued share capital of the company. Shareholders and proxies are reminded to use the raise hand feature to move or second this motion. I would now ask that the 9th resolution be moved. This resolution has been moved by Mr. Joe Taff, and it has been seconded by Jacqueline Thompson. Shareholders and duly nominated proxies are invited to cast your vote by clicking the for or against button on your screens. You have 30 seconds in which to vote on this resolution. The results are in, and as you can see, the ayes have it. I declare the motion carried. I will now ask Mrs. Gail Moss-Solomon, Secretary, to take you through the item of special business in the notice of meeting regarding amendments to the company's articles of incorporation. Mrs. Moss-Solomon.
Thank you, Chair. Thank you, Suzanne. Due to the COVID-19 pandemic, many companies face challenges holding AGMs because of the government-imposed restrictions on in-person gatherings. We do recognize the importance of these restrictions, which protect the health and safety of everyone. The GraceKennedy directors are therefore recommending to shareholders the amendment of the Articles of Incorporation of the company as set out in the AGM notice of the meeting. This amendment will allow for the holding of hybrid or virtual meetings in the event of unforeseen circumstances similar to the COVID-19 pandemic. As outlined in Resolution 6 of the Notice of Meeting, the proposed amendments read as follows. Electronic General Meetings 61A1. Notwithstanding anything in these articles, the company may, to the fullest extent permitted by applicable law, convene and hold a meeting of its members as a hybrid meeting or B, virtual meeting, and a hybrid meeting or virtual meeting shall be identified as such in the notice convening such meeting. 2. For the purpose of these articles, a hybrid meeting means a meeting that is held both at one or more physical venues and a virtual venue using any technology that gives members and directors as a whole, including members and directors not physically in attendance at any of the venues, a reasonable opportunity to participate by electronic means. And B, a virtual meeting means a meeting held at no physical venue and is held wholly at a virtual venue using any technology, which includes using an online platform that gives members and directors as a whole reasonable opportunity to participate by electronic means. 3. If the company holds a hybrid meeting, it shall have power to limit the number of persons in attendance at any physical venue to such number as is reasonable in all the circumstances. 4. Notwithstanding anything contained to the contrary in these articles, the notice of a virtual meeting need not specify a place as a physical location, but it shall include an electronic or virtual location or details sufficient to facilitate the attendance by members at an electronic or virtual location, and such a meeting shall be recorded as being held in Jamaica. The notice of a hybrid meeting shall specify a physical location and an electronic or virtual location. 5. Where the company holds a hybrid meeting or a virtual meeting, the use of electronic means for the purpose of enabling members to participate in such meetings may be made subject only to such requirements and restrictions as are A, necessary to ensure the identification of those taking part and the security of the electronic communication, and B, proportionate to the achievement of those objectives. 6. Where the company holds a hybrid meeting or a virtual meeting, it shall have powers to require reasonable evidence of the entitlement of any person who is not a member to participate in such a meeting. 7. The right of a member to attend a hybrid meeting or a virtual meeting may be exercised by the member's proxy, and notwithstanding anything to the contrary contained in these articles, a proxy form may be returned to the company by fax or other electronic means, and this shall be deemed as deposited for the purpose of Article 79 and valid, provided that the company is able to identify that the proxy has been duly stamped in accordance with the applicable law. 8. A member who at any hybrid meeting or virtual meeting either A, votes electronically, or B, establishes a communication link which allows a reasonable opportunity to participate, shall, for the purposes of these articles, be treated as 1, attending the meeting in person, and shall count to constitute a quorum, and 2, if he casts a vote, as voting in person. 9. Any failure of technology or any failure or inability of a member to attend or remain in a meeting held in accordance with these articles as a result of a mistake or of events beyond the control of the company shall not constitute a defect in the calling of such a meeting, and shall not invalidate any resolutions passed or proceedings taking place at that meeting, provided that a quorum is present at all times. I will now hand back to the chairman to have this resolution moved.
Thank you, Gail. Thank you, Suzanne. May we have a motion for the approval of these amendments as outlined in the notice of the meeting? That, pursuant to Section 10 of the Companies Act, the articles of incorporation of the company be altered by adding, after Article 61, the following article to be numbered 61A. The registrar has advised that we are in receipt of 65 votes by proxy in favor of this resolution, representing 18.9% of the issued share capital of the company. Shareholders and proxies are reminded to use the raise hand feature to move or second this motion. I now ask for this 10th resolution to be moved. It has been moved by Ms. Carleen Burgess and seconded by Arlene Bailey. Shareholders and duly nominated proxies, I invite you to cast your vote by clicking the for or against button on your screens. You have 30 seconds in which to cast your vote on this resolution. The results are in, and as you can see on your screen, those in favor have it. I declare the motion carried. Ladies and gentlemen, this concludes the agenda of this afternoon's meeting. I would like to thank all of you for your continued support for GraceKennedy and for your participation in our first virtual AGM. I am sure you will agree that today's meeting was a success. We thank Affinity Technologies and Visual Tech Solutions for providing the technical support for today's virtual annual general meeting. Thank you also to the very hardworking GK team who made today's annual general meeting possible. And of course, a big thank you to the entire GraceKennedy team working in our business around the world for your continued dedication and commitment to our company. We could not have done it without you. As Mr. Webby mentioned earlier, GraceKennedy will be 100 years old next year, and plans are already underway for our anniversary celebrations. We look forward to hosting you at what would be an extra special AGM in 2022. And we mark this important milestone in our company's history. We ask that you continue to do all that you can to keep yourselves and your families safe and healthy. Thank you very much, ladies and gentlemen.